AIBI. Can we have a huge round of applause, ladies and gentlemen? Joining Ms. Madhabi, we have with us our chairman of AIBI, Mr. Mahavir Lunawat, and Mr. Prithvi.
Thank you, ma'am, for honoring us once again by inaugurating our annual convention, this year at a much larger scale. Welcome also to all the participants again. Let me first of all congratulate you, and reference has already been made to that, for the unprecedented activity in the secondary market, primary market and mutual funds. Your proactive and pragmatic approach to regulations, supported by your advisory committee system and public consultations, have made the markets deeper and safer. Also focusing simultaneously on the ease of doing business and among many initiatives, I would like to congratulate you for bringing about the unimaginable T+2 listing. I go back to my first days of investing in 70s, and listing would take 3 to 4 months. So I think we have moved in my own lifetime from 120 days to 2 days. And this has been done with the involvement of all the stakeholders. We all understand your vision and mission with a focus on technology. And we at AIBI are proactive in our efforts to build a vibrant capital market. In this direction, we have designed several new initiatives, and we are delighted that some of these will be launched by you today.
Before we begin the launch, may I request Mr. Mahavir to please felicitate with a small token of appreciation to Ms. Madhabi Puri Buch. It's a good luck plant, and thank you so much for taking out your time. Thank you so much, Mahavir, sir. Thank you. So, ladies and gentlemen, we start with a few initiatives, a few launches. Request the claps and the cheers to be as loud as they can be. We start off with the investor section on the AIBI website. AIBI has developed an investor section on the website. The objective of this initiative is investor education. AIBI believes that an informed investor can take better investment decisions, which is fundamental cornerstone of any matured market ecosystem. To begin with, a very comprehensive IPO guide has been produced. Gradually, this shall be extended to other forms of offerings. May I please request ma'am to press the link as we launch this lovely initiative. Can we have a huge round of applause, ladies and gentlemen? All right, it is just about to go live. Here it is. Also speaking on this, for the ease of investors, an aggregated database has been created under the investors section, which will show at one place brief details of all types of documents that are open and offerings for subscription, along with a downloadable offer. This page for all of you will be uploaded on a daily basis. We now move on to our second launch, which is the issuer's IPO video. Based upon discussions with SEBI, AIBI is in process of creating sample of a video which will give investors an overview of the issuer, the offering, key risks, key financials, etc. Once SEBI approves the format and contents, all such videos can be hosted at one place on AIBI's website for the ease of investors, in addition to the issuer's website. This move will enable investors to access a video covering the IPO and other key details from authentic source, being the issuer company itself. The sample video is under financialization in consultation with CFD and SEBI. May I request ma'am to please do the honors. Let's have the video, please.
Welcome to the official video overview for the IPO of ABC Limited. ABC designs, develops, engineers and manufactures unmanned aerial vehicles or UAVs. Caution: investors are advised not to rely on any other document, content as per the report that has been commissioned and paid for by the company. Drone technology is a sunrise sector. Investors should note the following important risks. A majority of the company's sales are from contracts with central and state government agencies. Please read the risk factors beginning on page 29 of the RHP. ABC has completed a pre-IPO placement of 60 crore rupees in June 2023 at 672 rupees per equity share. The net proceeds of the fresh issue are proposed to be used for repayment, prepayment of certain indebtedness availed by the company. The price band for the IPO is 638 rupees to 672 rupees per equity share.
Let's have a huge round of applause, ladies and gentlemen. We now move on to the third and final launches, which is a visual image preparing offer documents, standard practices and disclosures. In order to make offer documents more robust at the very first stage, AIBI has compiled through a marathon exercise the key standard observations that have been made by SEBI in respect of about 30 offer documents over the last 6 months. This would enable the merchant bankers to learn from the past transactions and incorporate the key issues that have been raised by SEBI through observation letters, thus reducing substantially the time in approval of the offer document. May I request ma'am to please show us this lovely document to everyone? Let's have a huge round of applause, ladies and gentlemen. Thank you so much, Prithvi sir. Thank you so much, Madhabi ma'am, and thank you so much, Mahavir sir. Ladies and gentlemen, our next session is an interaction with Ms. Madhabi Puri Buch, SEBI Chairperson, and joining her is Mr. Prithvi Haldea, Founder and Chairman, Prime Database and Advisor, AIBI. The stage is all yours, ladies and gentlemen. Thank you.
First of all, I'm sorry that we are running a bit late. You have to just tell me when to stop and I'll stop. If anybody in the audience has a question, please have them sent through a volunteer. We'll find whether we have the time to take any questions at the end. So let me start first of all, ma'am, with the subject that is of interest to most of us in the audience, IPOs. We have had, we are in one of the best years of IPOs, and I believe courtesy evolved regulations. This financial year, till now, 56 IPOs have already mobilized more than 50,000 crore rupees. Close to 50,000 crore rupees that was raised in the entire previous financial year. Importantly, this year, fresh capital raise has been very high at 21,000 crores compared to 14,000 crore last year. This is a good sign, as fresh capital we know means expansion is also deleveraging. The investor sentiments for IPOs are very high across FIIs, DIIs, HNIs and the retail. Of the 57 IPOs in the last calendar, 41 received a mega response of more than 10 times, while 16 of these got subscribed by more than 50 times. What's your take on this?
You know, one thing that SEBI, can you hear me? The one thing at SEBI that we are all very clear about is that we cannot take the credit for any of this. It is the robustness of the economy. It is the strength of the companies. It is the trust of the investors. that is resulting in this phenomenon. So all of that credit goes to the real economy and what is happening over there. The limited role that we play, and we try and play it well to the best of our ability, is only two things. One is to maintain the integrity of the market so that that trust factor which is there, whether it is in operational terms, in terms of the resilience, the IT resilience of our ecosystem, whether it is in terms of governance and disclosure requirements, whether it is in terms of just saying that our market never shuts. As you know, during the COVID period, many of the jurisdictions faced lots of challenges, but our market never shut. So, ensuring that that trust and faith in the market is there is what we see as our role. The second role that we see, that is from the investor side. From the issuer side, the one commitment that we have made is that SEBI recognizes the time value of money and the fact that markets give opportunities in limited windows, and therefore any delay on the part of the regulator can have very, very serious consequences for issuers. And therefore, on a very, very consistent basis, internally within SEBI, we have taken numerous steps to ensure that the aging of applications with us, of course, in respect of all applications, but specifically in the context of IPOs, because they are very time sensitive, that the aging should come down. There is a chart which I had requested. If we can just display that. You know, I like to always back up everything I say with data. So I will take a minute to explain this. You can see over here, we've been tracking over the last few quarters, starting from March of 22, and today the bottom one at December of 23. Now, pendency of applications we don't see as a problem, because what it really means is that more and more issuances are coming, and that's actually a healthy sign. What we worry about is there shouldn't be aged applications. So, as you can see, the green and the yellow, which is up to 1 month old and 1 to 3 months old, is where we consider ourselves that everything is fine. The minute something flips over into blue and grey, internally in SEBI, this is seen as a very, very serious issue, which means that the assumption is there is a delay, and why is there that delay is something we're not happy about. As you can see, first of all, the number of blues and greys over the last 6, 7, 8 quarters has been coming down rapidly. In addition, if I were to say, and I frequently ask my teams this, and you'll be happy to know that the minute I ask it, I get an instant answer, because they know that I will ask, that why do we have 4 items sitting in the grey? And the answer, usually 9 times out of 10 is, there has been judicial intervention, so we can't do anything. We are awaiting regulatory approval from some other regulator, so we can't do anything. The issuer has not yet tied up anchor investors, so we can't do anything. And therefore, we are actually now considering that how do we now have possibly a new form of observations where we say that from our side we have looked at everything, we are perfectly happy. Now something external has to happen. Of course, if that something external has implications on our observation letter, that's fine. But some kind of an in-principle observation letter, so that wherever these items are actually not, the ball is not in our court at all, those will also go off, right? The other thing that we are working hard, and therefore I'm delighted with, this manual which AIBI has published, is that why is there ambiguity in the applications itself? Now here I'd like to highlight that, typically in a government office, the timelines for officers are counted from what we call receipt of complete information. Okay? Now that's a very convenient way for a government officer to reset his clock at will, because when it's getting very aged, the application, he simply asks another question and his clock merrily gets reset. Right? Now in SEBI we do not allow that. So all this data that you're seeing is from the date of first application. So we now do not give our officers any excuse to claim that, oh, somebody has not responded to me. Well, that's also your responsibility. You make it happen. And which is why I'm delighted again, as I said, to see this, because I hope that what will happen as a result of this is that we will have more and more applications which have already answered the questions which everybody knows we ask. So why wait for SEBI to ask those questions? आप पहले ही जवाब दीजिए, तो वो yellow भी green होता जाएगा. That is our objective. So we would want to look forward to that, and I really appreciate the efforts of AIBI in this. That was a somewhat long answer to your simple question.
Actually, you covered a couple of questions that I had later. But you'll have to accept the credit for what you're doing. Do not say, please, that the credit belongs to the economy or to the companies, because I have been a witness and part of SEBI ever since it was founded. And I can tell you with full honesty that the respect and fear that a regulator is supposed to have, I can see that at its maximum right now. And that respect and fear comes because of what Hemendra Bhai mentioned. We'll go after the wrongdoers, and we will be respected because we understand the markets, and we'll work for you and with you. And I think that combination is phenomenal, and I think please accept that credit. On the other hand, there is some concern that I keep reading and talking about is on the SME platform. We'll keep coming back to IPOs, but since we are talking of IPOs numbers, 148 companies got listed. Now some people say that's a huge number. Mahavir would come out with a number of some 1.75 crore SMEs or some 2 crore SMEs. Of course, that's one extreme. We are not looking at all of those companies even ready for, forget about IPOs, even for pre-IPO funding. But obviously 148 is not a very large number given the Indian landscape of SMEs. Is it a cause of concern that we have so many companies coming to the market, or are we need to do something regulatory or otherwise to see this segment grow, but in a manner which is as robust as the main board and does not raise the concerns that we had, say, several years ago, or which are being raised right now?
So I would break up my answer into two parts. The first is that the very fact that it's a separate board, right, means that we recognize that the characteristics of those companies and those issuances is different from the main board. So if we start to converge everything with the main board, then the concept of an SME board itself is frustrating. Now the question is that the value of putting it on a separate board is that the investors are aware that the reporting requirements, compliance requirements, listing requirements, all of those are different. And therefore, there is a higher risk. Now, the reality is that our retail investors, and I would say retail traders, okay, because we've analyzed the data, and we found that even IPO investments, the percentage of flippers within the first week. Let me just access the data. I love data, as you know. So the number of people who flip in the first week in any IPO for the NII category, right, which is the high net worth, etc., within the first week is 68%.
What?
Yes. And retail category, which is less than 2 lakhs, is 43%. So I think first we have to acknowledge that the IPO market is also a market of traders and not investors. Now, when such traders wish to take risk with their eyes open, we are not a nanny state. It's okay. You want to take risk, please take risk. Okay. What we are unhappy about is some of the malpractices that we see. And I'll give you a couple of illustrations. So should you expect some measures from SEBI to come in that direction? I think the answer is yes, because we now have the data. So we will now act. So, for instance, mule accounts. We all know how those work, right? We are now getting evidence and data about it, so we have to come and do something about it. The second is in terms of inflating the IPO application numbers to give an impression of high amount of subscription. So either people who are, who later withdraw their applications, or even worse now, okay, because I think we fixed that problem of withdrawal. So now they've moved to, you apply in a manner that your application gets rejected. So you put in hundreds and hundreds of crores of applications with multiple PANs, knowing full well that they will get rejected. So the whole purpose of applying is to inflate the number, knowing full well that it will get rejected. Right? So these are the kind of practices which we are observing, because we now have the data to be able to see such practices. And we are also seeing, I would say, that there is some pattern of which kind of merchant bankers tend to be, let us say, more frequent names occurring in such kind of malpractices. And therefore, we will be, in the interest of the investors, we will be required to both review policy as well as enforcement action on such areas. But I'm saying those are bad apples in a crate. It's our job to protect investors against those. But conceptually, it is a free market. We believe in market forces. And so long as there is information and so long as there is a level playing field, if there is risk-taking in the market, we should not be coming in the way of investors wishing to take risks. And I would only draw the parallel to say that in the bond market, there is a lot of anxiety to say that below AA, there's just no appetite in the market. Now, at least in the equity market, there is appetite for higher risk assets. So, should we be anxious about it? No. So long as the investor is coming in with his or her eyes open and there is no mischief which is happening.
Fantastic. Let's move on to another area, and that comes up for discussion at all the AIBI conventions and also publicly, is the issue of pricing. I've been split, about the various kinds of views which come in. And I also don't like when people, or especially the media, puts out stories how IPOs of 2022 are doing or 2021 are doing today. Probably there's a mindset that IPOs should perform forever. They are put on a pedestal. This is the offer price. And any random date that you pick up to do an analysis, you say, as of today, 47% of the IPOs are quoting below their offer price, or whatever is the number. I believe IPO pricing is tested on the date of the subscription and on the date of listing. Beyond that, it becomes a secondary stock and should be treated and considered as a secondary market stock. There's also this feeling which keeps circulating that merchant bankers are greedy in overpricing. My experience has been that merchant bankers obviously would like to look at a good price, but are they greedy enough to then, take away their institutional investor base by selling them highly priced IPOs, or have their merchant bankers track record, which is now required by SEBI to be, showing negative numbers all the way. So I think merchant bankers have a huge responsibility, but in the current market context, anchor investors are the ones who are really setting the price. I've actually met many issuers who said कि यार ये investment banker ठीक नहीं है, underprice करवा दिया, इतना time oversubscribe हो गया. Probably we could have gotten a much better price, but that's the way the market works. I know you have said many things about pricing, but your recent take or current take on pricing.
मेरा तो धर्मा डेटा है, तो मैं आपको डेटा देती हूँ. So, we've looked at the main board IPOs from April 21 to December. In terms of listing day, out of a total of 50 odd issues, roughly speaking, 21-22, the ratio was 37 positive, 14 negative. 22-23, there were about 40 issues roughly, 24 positive, 15 negative. And 23-24 to date, 47 positive, 6 negative. I think the important thing to note is that it's always a mixed bag. And therefore, the acknowledgement that IPO pricing is not, is at best a judgment of various players, and that it is not something which, which can go either way, let me put it that way. Now the odds keep changing when the market is bullish, when the market is bearish, etc. But there are odds to be played here. So my belief, and I've said this before, is that the price discovery mechanism of IPOs is imperfect. And therefore, if a retail investor, not a trader, not the one who wants to flip on day 1 or day 7, because then you're a trader, you're taking the risk, you know the odds, upar bhi ja sakta hai, niche bhi ja sakta hai. If you're an investor, which means you want to hold for a reasonable period of time, then really speaking, why are you wanting to take this risk of upar bhi ja sakta hai, niche bhi ja sakta hai? Wait until the price stabilizes. Possibly wait until the first set of quarterly results come. There is no hurry and there is no impact cost for a retail investor. Now, institutions, if they want to wait and buy in the secondary market, there will be huge impact cost. So I can understand an institutional investor wanting to come into an IPO, and they also have the wherewithal to independently assess the value. But for a retail investor, if you want to play the odds, come into the IPO market. Then if you win, good. If you lose, it's part of your gamble. But if you are an investor who believes in that company for the long term, then wait until price discovery is more efficient.
So since you've mentioned about the flipping nature, especially of the NIIs, is there any thinking on how do we, because we also know that they are behind the huge oversubscriptions, they're all just into this business for trading. Are we looking at any kind of overhaul in terms of, how do we look at that segment of, because retail we have seen follows the QIBs and NIs. They would not apply their own mind, they would play the game of listing gains. Many of them flip. Many of them are lazy to flip and continue to hold. But these NIs have been under discussion for a long time. Is there any thinking on that front?
I think our last circular on the allotment basis has conveyed the regulatory thinking and the way in which the financing of these applications is done. And the Reserve Bank of India has also brought out certain regulations on funding of IPOs, etc. So I think from our side, the worry that we had that the concept of proportionate allotment was leading to this huge amount of leverage for the IPOs was distorting the price discovery. That was our view. We have taken whatever measures we needed to take. Now, it's a free country.
Okay, my next question you've already covered, but let me still come back to it, which is about the turnaround time at SEBI. And you already mentioned very lucidly as to how concerned you are about the fact that timing is very important and how you have set your new standards and guidelines for within SEBI to see that the applications are processed in good time. And I think AIBI, this manual that has been produced is one good step in that direction. I think we said that if the same questions are going to be asked and then you take your own time and then you start blaming SEBI, that's not right. So why can't we put all the questions, which are typically asked by SEBI? And maybe at some point of time this can become part of ICDR. Because if these are standard observations of a kind which you expect most issuers to follow, and gradually, the ICDR gets more strengthened. But I think that would be very good news for participants here that SEBI is very focused on the turnaround time, and let's see the data next year, how this new vision takes place.
मैं आपको एक कहानी सुनाती हूँ.
Yes.
So a few days ago, we were doing a KRA review of one of the departments in SEBI. And one of the youngsters said, "Madam, I want to show you something." So I said, "Acha, dikhaiye." What he showed me in 3 minutes just amazed me. And I can tell you that going forward, those numbers, provided we get reciprocation from your side, those numbers should just look wonderful. Because what he showed me was the first real application of Gen AI that I have seen in the last 6 months, ever since this has become a thing. A lot of people come to us, a lot of people say a lot of things. But here was this youngster who had actually developed. So let me tell you what he had developed. He had developed a complete mechanism using ChatGPT to basically read an annual report of a REIT and create from it a complete internal SEBI memo across about 12 or 13 regulations to say whether the REIT had actually complied with our 12 or 13 regulations, yes or no. Finally, culmination was a table saying here are the 12 SEBI regulations. Does the document comply with it, yes or no? And on which page of the document is the evidence of compliance? And at the bottom, there was a neat summary of the compliances of all 30.
My God, that's incredible.
And when I asked him, how long did you take to do this? And he said, "Madam, thoda time laga." I said, "Kitna time laga, Manoj?" 2 hafta laga, madam. I was on top of the moon. I'm like, first of all, this is the capability of our officers. Their understanding of both the domain and the technology. And within 2 weeks, he has created something which now every officer can use in that department. And of course, I'm a glutton for technology. So I immediately set up a task force to say, everybody has to now go there. And every operational department, including the department that looks at IPOs, is now going to look at how to actually do this to process IPO documents as well. So in the next, I won't tell you 2 weeks, but certainly in the months to come, we should expect that, 80% of the work that an officer does in processing a document should happen through automation, and then the officer is really applying his mind to the substantive issues that are there in the document. And that's what I hope will make these numbers look much better when we meet perhaps another time.
Fantastic. I think the AI should also be able to tell what is lacking in these documents. To generate a letter.
Of course, when it says no,
yeah.
so it will say
So
no.
it means both.
कि भैया आपने ये लिखा ही नहीं है. Correct.
So I think it works both ways, and that's a fantastic step going forward. I come back again to a question which is to do with in some way pricing, but from a different perspective. And there have been a lot of reports, media reports. I've also heard in the conferences that the PE investors have been very greedy, and they are the ones who overprice IPOs, and they exit at the time of listing. But we don't understand, we don't realize that a lot of these PEs have made investments which have got decimated. They are, or have earned negative returns, very small returns. And out in a bag of 10 companies, maybe 2 or 3 are the ones which give them good returns. So that's the PE's nature of business. But we are celebrating the success of the startups in India, and we should also give some patient understanding to the PEs who have waited for years, 7 years, 10 years, for their investment to mature. How is SEBI looking at this world of private investing or VC investing or private equity investing, which culminates into an IPO?
So first of all, everybody in this room is part of the capital markets, right? So nobody in this room can have a problem with making profits, right? So we don't either. It's the nature of this ecosystem, and profit is a motive, and there can be no dispute or derogation of that issue. I think the only thing as a regulator that we think about is whether the governance and the disclosures are appropriate and suitable. So that a company has to be prepped and prepped well before it comes to an IPO is correct. But if that crosses the line into window dressing and misrepresentation, and then 1 quarter later or 2 quarters later, with change in accounting practices and so on, it is discovered that there was actually something wrong in the information that was presented at that time, that is something which is not a good thing. But in and of itself, I think that the capital that is required in our country, particularly for innovation, I think the private equity industry plays a very important role in bringing that capital. And unless they are able to exit with profit, why will they come? So if you want capital to come, it must have an opportunity to go. And therefore, that cycle of coming and going must be maintained, and people must make money, otherwise why will they come? So to us, that is a good thing. That's not a bad thing. But doing it the wrong way is something that we all need to think about, worry about.
So may I suggest, when people ask me what to look for when investing in an IPO, of course I have stopped investing for many years now. But I tell them that look at the promoters, because that's the key. Look at the risk factors, especially the first 3 or 4, in case the company has a non-compliance or a criminal or a litigation kind of record. But also in case the PE there is a PE company, and if that is exiting, if they're exiting fully, then it's a no-no. If they're exiting half-half, then also you have to be doubly cautious. But if they stay invested more than 50% after the IPO, that means they have insider information. And if they are investing, they choose to remain invested after the IPO, they are not exiting, then probably it shows the confidence of those PE investors. Is there any merit in the belief that PEs cannot exit beyond a point in an IPO? Because they've stayed for 8-9 years, can we put, I know it's anti-market, but I'm only saying that this whole practice of, or I leave it to you.
I think, as you said, the information about what they are doing should be disclosed. And then an informed investor should take that information and decide and vote with his wallet. That's our entire regime is disclosure based. So I don't think we would like to change the fact that everything that we do is to say we believe in the market, and so long as there is adequate disclosure, it's up to the investor.
I'll come now to a very difficult subject as far as I am concerned, which is the objects of the issue. Objects of the issue and issue fund utilization. Now, as we know that, especially with the new age businesses, the objects may not necessarily be for capital expenditure or fixed assets, or they are very fungible. They could be looking at acquisitions, they could be looking at working capital. In some cases, they could be deleveraging. And SEBI has been very liberal in terms of allowing a general corporate purpose. But we know that companies require money or want to raise money much beyond that 25%. Is there a way of looking at issue objects especially for new age companies? Money is fungible at the end of the day.
So I think the feedback that we have received is really in the context of a war chest for acquisitions. Because for running their business and for, growth and scaling, whether it is investment in technology or in, customer acquisition costs, etc. I think that the feedback we have is that that's not a problem. The problem is that they want more flexibility in terms of creating a war chest for acquisitions. Now, we already have, I think, a certain amount, 30%, something in that nature, which is available as saying that if you're raising 100 rupees, then 35 rupees you can keep for an unspecified reason. And beyond that, it cannot be unspecified. There is also a clause which permits, I think, that if you want to change the objects of the issue, you have to go back to your shareholders and you can get approval and you can do that. So, we are open to any suggestion that the industry would like to make as to how to achieve both things. We think that these two things already give a reasonable amount of flexibility. But if the industry needs more, and they're saying that, right now, at the moment, the timing for capital raising is good, I want to raise the money, I want to, raise a war chest. Our only concern is that if it's really only an acquisition war chest, then is the investor really buying into your company, or is he investing into a private equity fund that you want to fund acquisitions? And very often these acquisitions are not even strategic related acquisitions, they are general acquisitions. So we are open. If the industry would like to come forward with some proposals as to how we can ensure that you don't become a fund, right? If you want to be a fund, float a fund. Then you don't have to specify any end use. You're telling the investor that you give me the money, trust me, I will invest it wisely. So somewhere this, character of an operating company versus becoming a fund, if we can resolve in some way over and above the two flexibilities that we have, we are very open to.
Yeah, so I think the AIBI should actually deliberate upon this and come up with a proposal. As Ma'am is saying, we can look at taking this forward. Corporate governance, this is a question that bothers a lot of people. Regulations continue to be enacted, modified. Are you happy with the state we are in? And only on one issue I would like to just, flag your attention, which I've done once earlier, is I see a independent director resigning before his term ends as a red signal. A. B. I still find that 90% or so reasons given for resignations are personal reasons, health reasons. And I actually questioned one of the very senior persons in the market. I said, you resigned from this Hyderabad company for health reasons, Bangalore company for health reasons. And then within 2 months you joined another company in Bangalore. Now you're healthy again. So if that is a disclosure requirement, either we do away with it. Okay, you want to resign, go. You don't have to tell the shareholder. But let's make some sense out of the reasons. When auditors or independent directors resign, especially before their term, if they are not reoffering themselves, it's okay. If they are resigning before their tenure, I think that should be a serious concern.
Let me address the larger issue first. I think on governance, which is really manifested through our LODR regulations, we are very, very pleased with the initiative of the three industry associations, FICCI, CII and ASSOCHAM, in terms of the Industry Standards Forum that they've put together under the leadership of Mr. Kamath. They selected him as a chair. And the work that is going on there is bringing a lot of clarity to how should a company implement or execute to comply with the regulations. So there are implementation standards for complying with LODR, which is really where all the governance matters reside. And I think that it's just a start right now. But I think that certainly we will be going to our board to suggest that this mechanism of Industry Standards Forum should be formalized because we see a lot of value in it. And standards which are set by the industry, of course in consultation with SEBI because they have to, be in the same direction as the regulation, are a great way to ensure that the mechanisms are practical, there is an ease of compliance, and there is no ambiguity, no uncertainty, and no, shall I say, therefore anxiety. So when you know that if you do A, B, C, D, you are deemed to have been compliant with the regulation, unless of course it's outright fraud, which is a separate issue altogether, the whole anxiety level will come down, and also the, I would say, the compliance level will go up. So we are very, very hopeful that this mechanism, which we have done on a pilot basis, will give very good results, and it will be a win-win on both sides. There's ease of compliance, practicality of compliance, and at the same time, the regulation is being respected. So that's how I see that piece. I think on the second issue that you mentioned, I must share that I have a lot of empathy with what you say, that, if something is not working, why have the regulation, right? Either enforce it or get rid of it. And that's frequently something that I share with my colleagues. When something happens, I say, if you're not able to monitor, to uda do. That is my word, uda do. What is the point of having it there? However, I think that there is a certain cycle of maturity, and there is a certain, shall I say, leeway to independent directors. So we have seen some independent directors, obviously I won't take names, of some companies who have in their resignation letter given a 2-page description of why they are leaving. So I'm saying, in a way, this encourages particularly independent directors to say that we are asking you to do this and you have an obligation to do this, and therefore they are doing it. If there are others who feel that, maybe they don't want to rock the boat or whatever, in any case the market picks up the signal. So my question is that if in a way it is serving a purpose, and as the entire ecosystem matures, maybe more and more people will use this opportunity to use the regulation to say, no, I must give a full description of why I'm leaving. Let it stay there and let the system mature.
So, ma'am, I'll just conclude this by my own personal belief, which is that independent director is an oxymoron. I have talked to hundreds of promoters, and their statement is very clear, and I agree with them, is that I'm the promoter. Why should I get somebody on the board who's a stranger? So he has to be known to me. I mean, and that known could be a close friend or somebody referred to you. So he has to be somebody that you know well, because you are scared that a stranger may rock the board, may leak information. However qualified he may be, he may ask questions. So you want somebody on the board as independent director as long as he meets the definition of an independent director. On the other hand, I've talked to a lot of professionals who refuse to join boards. And I've asked, offers didn't come your way or you've taken a call. And they say, I cannot risk, I have got offers from some friends, but I cannot risk my life's reputation to join a stranger company, because I don't know what's happening inside. So on both sides we are seeing that companies do not get independent directors, they get friends and relatives and known people known to them, and on the other side, good people who can actually bring governance are reluctant to join companies. But anyhow, we'll close it at that unless you want to rebut me on this.
I will only say one thing, that I'm an optimist. And I believe that when there is a opportunity which is given to a person and a responsibility that is cast on that person, I think that it's a spectrum. It's possible that, they may sort of choose to look the other way on small matters. but it is my belief that when there is a big matter, they will do the right thing. And that itself is progress. And I'm optimistic that going forward, the independence of independent directors will only increase. So,
okay, we leave it at that. Thank you so much for all the time you gave me. But before can we take up one or two questions? Hemendra Bhai is very keen to ask something.
This is a little bit a question where lot of today youngsters are putting up various kind of companies, technology companies, or you name it, and they are growing. The question is, up to now, the private equity investors are investing with them. Now, what is I'm seeing it in the last 6 months to a year, the private equity investors don't get exit. Now, the problem is they are not that size that they can come for listing. And though we require more ventures and venture capitalists to come in and more youngsters to come out with business. Now, there is a problem which has happened, that investors are refusing now and these people want money. Now, can we create a place like a marketplace and some kind of supervision or guidance coming from SEBI, but to motivate so the more money comes in, because we require more youngsters to come out, and tomorrow the future is in these youngsters where they will come out and will become real heroes in future. Thank you.
I think there's absolutely no doubt that we would love for that to happen. I think the important thing is that I think it's a psychological issue that this kind of capital, which is very high risk capital, right? The probability of failure is high, and the probability that it will be a multi-bagger is low. Putting it in the same sort of space where people assume the safety, protection, governance of a listed company, but actually it is not there at all. We worry about the issue of positioning, mis-selling, and just expectations of the investor. So therefore, is there a separate mechanism? I mean, we thought that angel investing, and we have angel investor funds which are there. So we thought that angel investing is a good way for people to come in and, give that capital, make their independent decisions. They are not bound by any fund manager. They can back individual people. So again, we are completely open because the objective is a very important objective. But we don't want it to appear to be on the same level as a listed company, because then expectations from the investors are different. So we are very open. Any proposal on that, we would be very happy to this thing, but probably in a different avatar.
Anyhow, thank you so much, Chairperson. We've exceeded time because I could see that you were willing to take more questions from me, and I exceeded my own time limits. Thank you so much. Is there any one-line public advisory for investment bankers? I know that you have many private meetings with them, but anything that you would like to be publicly?
I think I would say two things. One is I heard Vallabhbhai's, words on ethics, and I think that what is important for us to take away as a message from what he said was that while a large part of this room is very young, by the time you reach where Vallabhbhai has reached with all of his success, if that's what he's saying, then I think it's a message to all of us that what is really important and where do you draw the line, and where do you say yes and where do you say no, and what is it that is driving ethical behavior in this market. I think that's an important takeaway that I would have. And the second takeaway is that, we are here as SEBI We believe, I've said this on numerous occasions, that the whole purpose of our existence is capital formation. And you are the key players in that capital formation. So this is a partnership. And as I said, very happy to see this first product of partnership. And I look forward to many, many more, so that we have not only listing, which is done at super high speed, but also approvals which are done at super high speed through a partnership mechanism.
Fantastic.
Thank you.
Thank you so much.
Thank you so much, ma'am, for your time. And thank you so much, Prithvi, sir. Ladies and gentlemen, I'd like to introduce our next set of presenters on the stage. Firstly, I'd like to invite Mr. Asad Daud, MD, Aeroflex Industries Limited, and Mr. Ashish Jakhanwala, Chairman, MD and CEO, Sami Hotels, to speak about the entrepreneurs' roadmaps to IPOs. Let's have a big clap for them, ladies and gentlemen. Post the entrepreneurs' roadmap to IPOs,